Good morning, everybody. So Leeloo prop firm accounts have been passed. I just have a couple more days. I think I have maybe 1 or 2 days left to get my trades in. I'm not gonna do anything crazy today. I'm gonna try to trade with small size, try to wait for the opportunities, analyze the market as they go, and see what we can get. So the structure overnight is actually pretty interesting. Let me get my pen out. Hopefully this time it works. I know yesterday I had my pen out for pretty much over an hour and a half, and nobody saw it. Yeah, it doesn't work here. Don't know why. So look at this structure that broke. Oh. Yeah, this that broke overnight. We came down. We retested the top of that, or sorry, we retested the bottom of that. We created this structure, and now it seems that we're breaking out of it. So this is very important. This is very important to watch right here, because it depends on what we essentially do when we get back into it. So what I'm going to do, I'm just going to create a box here. Yeah, I'm going to create a box. Kind of looks a bit messy, but we can see that this is a box. Put a box right here. Test the high of this, and I want to do it right here. This is not so significant. I rather this right here. You see, it's the midpoint. It's tested a couple times. You get better as you draw these boxes, you get better at visualizing them. I like to see multiple touch points, right? I think this is 1, 2, 3. Over here, we kind of broke it a little bit, but this just kind of tells me that you had a lot of trapped players in here. So we attempted to break lower, but we just couldn't, and so we just, essentially ended up making our way, testing the highs before we stopped everybody out. So you have a lot of shorts here, actually. Let's see what else happened overnight. Not much. I mean, we made new lows, and we continue to make these lows. So it's just gonna be one of those days, I guess. Could this be a full downtrend day? Too early to tell. Too early to tell. I mean, it's just been 22 minutes past the open. Oh, hey Rui, how's it going, man? Sure. Do you trade Nasdaq? Do you trade ES? What do you trade typically? My voice sounds like a robot. Yeah, I got that a lot before. Let me see what I can do here. Just bear with me. It was working fine before. Oh, it sounds good now? Interesting. So I was saying earlier, we came off a lot today morning. Still very early in the morning to determine what's going on. I think ES is doing the exact same. So you can see that equities are following each other today. Just wanted to look at this overnight structure here. This is a 3-minute chart. But just to go look at this overnight structure, we came off overnight. We made new lows. We retested the overnight low. We came up just a little bit off of it, right at the open of the London Open. Came down straight away. Then we created this consolidation box. This is Nasdaq we're looking at. So we created this little consolidation box, and right at the open today, we tried to break out of it, but we weren't able to, and we just went straight down. So right off the bat, we know that this is a weak market. So we're going to be looking to short at any chance that we get. Typically, some of these setups that I like is when you get this massive downtrend, and then you get a bit of a consolidation, kind of like what we're seeing over here right now in this volume profile. You have volume up here. We sell off on low volume, and then we create another profile. Two things can happen here. We either break up or go straight down. Longer term, this also supports the cause. And yeah, it's pretty much what I'm looking at right now. Still very, very early to tell because, as you know, with equities, it can be by the dip type of scenario. But it's just a case of watching the order flow, understanding what's going on, and trying to take opportunities from there. But isn't it crazy though? Look at this. We open at 9:30, and the cumulative delta of the day is positive 2,000. It's positive 2,000, right? And we're down 425. We're down about 125 points. Yet there's been more aggressive buying than there has been aggressive selling. How does that make sense? Something's a bit off today. This means that despite the aggressive buying, somebody has to get their sell orders in. We're barely getting any type of rotation. Look at this. It's just one big sell-off. This is not the type of structure you typically see on a sell-off. What you normally see is you see a lot of red, right? You see a lot of aggressive selling. But this just seems to be like, it's a mix, right? You get a lot of blue, a lot of red, a lot of blue, a lot of red, like it's all over the place. Bits could be pulling out, yeah. I don't have a heat map here. I don't typically trade with the heat map, but if you're watching a heat map and you see bids pulling out, then it's totally possible. The only structure that I can see right now that we can reference to is this overnight structure here, this overnight consolidation. And so this could just be one massive shakeout, right? It depends. Like we need to see, like if you want to go short right now, if you're looking to go short, you would short somewhere at 320, around this area here. But I would be wary of that because there is a lot of buying at these areas as well, right? So it depends on the absorption levels of these sellers. Because they could be absorbing these levels at 320, but you don't know how much more they can absorb. Tricky day. Tricky day already. It's tricky because you already know that you can see that there's this massive sell-off, but it's not what you want to see in terms of the numbers. Because at any given moment, sellers can stop selling. No, not only, but those are my favorite types. Those are the ones that I understand the best. AMT, I don't know what AMT is. Auction market theory. Yeah. I mean, the whole market's an auction in the sense, right? So yeah, I use TPOs. I have it on another screen. But I'm more of a very short-term trader. So my TPOs and market structure is just there to give me the bigger picture, and order flow footprint is for the is just for me to take those very quick short trades, just to understand where trap traders are. Oh, thanks, man. Yeah, I don't know why you don't see many footprint traders. I think because you have a lot of stock market traders and forex traders, and they typically don't use footprint. So footprint is usually dominant in the futures industry because you get that accurate data. So even for futures traders, I don't know that many that actually use a footprint for whatever reason. I think people are very comfortable looking at indicators, and I think maybe footprint might be a bit too complicated for them. I know that for footprint though, what really is kind of hard to understand is this whole notion of you get this little box, and then you have your bids, right? And then you're trying to make sense of the numbers over here, right? And like you can't even calculate the numbers. You don't know what you don't even know what they mean. I mean, your mind doesn't really work that quick. At least for me, right? So this is why I have my footprint set up this way, where you have the delta on one side, and then you have the volume on the other. Because that's pretty much all you want to know, right? You just want to know how much volume was traded at this price, and at what level in terms of delta, right? So when you filter it that way, I think it clears things up a lot. So let's talk a little bit what's going on here. What time was this at? 9:50, 9:51. So you can see that there is this consolidation happening right here. Let's try to analyze this. Right, market sells off, sells off, sells off, and now we come to a halt. We come to some liquidity. So depending on how we want to trade this, or depending on what market does with this area, that's where you know, you kind of get set up for the day in the sense that when we leave an area like this, you can generate a lot of information based off of how we leave it, how much time we spent there, because these are all live traders. These are all active traders. So the guys right now, guys who are short up here, they're happy. They're very happy with this trade. They barely got any pullbacks, right? They barely sweated, right? They were barely in any offside position. You get in here short, you're filled, you're onside almost automatically. So you're happy here, right? If you go long, on the other hand, right, you never saw the light of day. And so we need to keep all of this in mind. So this zone right here is very important. What we're doing, what we're creating, this type of structure over here, it's very, very important. We're creating a lot of time, a lot of volume. The point of control shifted down almost immediately, right? So there's a lot of interest to transact over here. There's a lot of interest to transact at lower prices. So if you want to take a strategy right now, what you want to do, or what you can do, is you can go short around this area, and you know automatically where you're wrong, right? You'd be wrong like somewhere up here, right? Depending on your risk level, right? You can play this range. Oh, one sec. Sorry about that. Yeah, you can essentially just play this range of 25 points. Okay, and you can make some pretty decent ticks. So you could have gone short here. You already saw that there was absorption at these levels, right? You could have gone short at the top. You can take some off here if you want. You can take the rest off here if you want, or if you can leave it for lows. But it doesn't typically work as quickly as you want it to, in the sense that it doesn't get rejected and come straight down. You get a lot of the sideways, right? You get a lot of sideways, and then sometimes it can go right back up. So that's why, depending on your strategy and how you want to trade, you can go in with, let's just say, 5 contracts. You can take some off here, you take some off here, you put the rest at scratch if you want, or you leave it, or you leave your stop loss as is. So now this is interesting how we're coming down. I could be totally wrong here, but I don't think we make new lows. I could be totally wrong, but I just don't think we make new lows. Unless I see something that I want to see. Unless we're seeing this, but there's just something about this that doesn't really strike me very well. We're building volume, but you see the amount of volume that was absorbed here? Now we're coming off, but we're not getting that same volume. It's like it tapers off just a little bit, you see? If we go above 99s, right here, if we start to curl back above here, we're going to test midpoint for sure. How am I going to trade it? How I would trade it, I'm not trading much today because I passed my accounts, all my accounts, and I have maybe 1 or 2 days, so I'm going to take small trades. How I would trade it is I would probably have gone short around here, right, with a very, very tight stop. Because if we curl back above the midpoint, then there's a very high probability we test 25s, and then there's also the possibility that we break this zone. So I would want to flip my order and then go long. But right now, sellers seems to be in control. Like, you just don't know at what point they're going to stop selling. And right now, it's constant selling. This is passive buying. This is not aggressive buying whatsoever. Sorry, passive selling. What am I saying? This is passive selling. Passive selling because of all this positive delta. So you have a lot more sell side liquidity on the books. But it's funny though. You see, you have about 1,600 on the bid at the market depth level, but you only have 1,000 or 1,100 at the ask. Yet we're still going down. So maybe these sellers are not showing their hands. Maybe these sellers are going in 1 right through algos to try to sell all their orders. Because normally in a balanced market, what you would see is you would see the total bid and the total ask to be relatively the same, very little spread. There's volume here. What you want to see typically, you want to see this come down, right? That's the expectation. You want to see this continue downwards. But if it doesn't, then it can get nasty for sellers real quick. And besides, I mean, like, you don't want to fade a move like this, you know? Like, a lot of people think that they're going to catch the bottom, right? Without really thinking how they're catching the bottom or why they're catching the bottom. But just take a look, like, why would anybody fade a move like this? That's a significant move. That's a 125 point drop for what? For nothing. You're barely getting a pullback, and now you're making new lows. The POC is already shifted down, which means a lot of the volume is down here. Right? So right now, everything's pointing to bearish. Everything's pointing to bearish. Don't fade a market like this. When you start to see more time and volume being spent around here, you start to see more tests, right? Breakouts, then you can go up. And you can go up fast. You can go up really fast. I would argue you can go up just by marketing in. Mostly by myself, yeah. A lot of trial and error, a lot of screen time, and I take from different sources, right? I've taken from different sources, then I've just tried to understand it myself, tried to deconstruct what I learned. And it's just a lot of screen time. And the thing is that you understand that I could be totally wrong with everything that I'm saying, right? None of this could make sense.
right? It could not even be reality what I'm saying. But the fact is that I'm consistent with what I'm saying every single time. I'm also not the type of guy to look at the time in sales just to try to read the price ladder like this price ladder action, because it's very difficult for me to make sense of these numbers that are coming in and out, right? You get a lot of spoofing. You don't necessarily know what's being traded. But what I do look at rotations a lot, and I also look at patterns within a price ladder in the sense that, um, if we come down to say 88, right? We struggle a little bit at 88, and then we go up to 90. We come back down to 88. You know what I mean? Like that's what I look for. Because then the next time we break 88, I know it's a significant piece because we struggled to break it before. So if you want to short this, you can short around here. You can maybe short here. Put your stop loss above 12.13. Actually, for Nasdaq, it's tricky. Nasdaq, you can never be accurate with your price. Nasdaq could literally shoot up by 4 or 5 points past your price, depending on the ATR. No, it's too early to do this. To do a trend line, it's way too early. So the thing is, a lot of people that are getting in short now can be trapped. Because throughout all of this, if you're waiting for a pullback to go short and you haven't gotten your pullback to go short, you've either chased or you're chasing now to go short. Yeah. So you get a lot of this volume there's a lot of energy right here that needs to just, um, in a way, it needs to release itself. And in which direction, um, we don't know. But there's this energy that needs to release itself, and how it releases itself is what you should be looking at. Yeah, that doesn't mean much though. It's most likely going to get hit. depending on this rotation now. You see how I said like you can't be so accurate with Nasdaq levels? So now my game plan right now is expecting this to curl back down from here. If it doesn't, then I'm wrong and I'm out, right? Because if we're retesting this area again, I don't think that it's gonna be able to defend it again the same way it defended earlier. So now the way that we went up and now we're coming back down leads me to believe that a lot of buyers expecting this breakout, a lot of buyers up here, a lot of buyers here, could start panicking. And you get this rejection off the top. A lot of this energy that's been building up, and now we're curling back that down. So I also wonder, because this is very possible, we come down to the zone of volume and we push back up, because late sellers over here are going to want to buy at this point. They might not, and they might not necessarily be holding. So it really depends on who's more trapped, sellers or buyers. There, I took profit because I didn't want this to reverse right on me. So normally on normal days I would go in with a bit more size. I would go in with a bit more size. I would take some off at the lows, and then I would leave the rest to ride. And I would either keep a trailing stop or I'd put it at scratch. But I'm curious to see what market does now here at lows. Fuck me, this could reverse. This could reverse, I don't know. There's just so much volume here, you know? And there's so much volume, and imagine being a seller, imagine being a late seller to the party, and you've seen all of this happen, right? And then you automatically, you sold, and now you're offside, right? Whereas before, you sold, you were onside right away. So you come in and you sell right here, and you're offside. It does not spark the most confidence in your trade. So the moment you become offside, you're like, oh shit, did I actually take the wrong trade? But the fact is that we didn't even come back into this consolidation zone right here. So we could actually make a new low. Look at the ATR. We went from like maybe a 25, 26 ATR to a 19 ATR. So volatility is definitely slowing down. Oh, it's for ATR. It's just average true range, right? It just tells me how how large these candles are on average. That's just pretty much it. I mean, it can help with your stop loss. It can help with your profit taking. It's just there to give you an idea of, say for example, if you have an ATR of 20, right? Um, if your trade goes against you by more than, I don't know, 20, right? Then you know you're wrong, right? You know you're on the wrong side of ATR. So you can put a stop loss depending on that. If your ATR, if the ATR is 40 and you're putting a 10 point stop loss, your stops are way too tight for the day, right? It's just
it's to help you be a bit more dynamic with your trading, because if you're always coming in on the day with your set 3-to-1 ratio, but in the sense that you want to take a 20-point profit with a 10-point stop loss. I know that's a 2-to-1 ratio,
but let's just say you want to take a 10 point stop loss, 20 point take profit, but the ATR is different than, every single day. Um, you can't be so rigid with that. You got to adapt to how the market um, is behaving for the day. And ATR kind of helps me understand, uh, on a broader sense, if that makes sense. Yeah, these sell-offs are tricky because it's just the characteristics of the sell-off is not typically what you see. There are so many different kind of downtrend days, and obviously this is one of them. But typically it's just a lot more aggressive. It's a lot more. I don't know. Just something feels off about this. Now that you're building a bit more structure, you create a trend line, like a downtrend line like this. It's still very weak. I mean, it's but it's not the strongest of downtrend lines, but whatever, it's there. Curious to see if we break this level, how fast we break it. Are we trapping any traders in? So it's tricky because if you're going short, you don't want to see this. Like, if you're short today, you really don't want to see this, in the sense that you get a slight retracement and then you come down thinking that, oh my god, we're gonna break with volume, and then you get this type of, instead what you do is you get this very annoying curl, right? You get this very annoying, we broke it by a few points and now we're coming back up. If you're selling, you're frustrated, man. You're very frustrated as a seller. So you either scratch your trade or you get stopped out. So you start buying at these levels. It goes up a little bit, comes back down. You enter, you chase again. I've traded days like this. I've been short on days like this. I've been short late on days like this, and I know exactly what goes on through traders' minds. You get stubborn, you continue to short, like, no, like, oh, I got stopped out, okay, I'm gonna do it again. Oh, I got stopped out, I'm gonna do it again. And then finally it breaks up and you're like, fuck. And if you have sense, you'd, instead of going short, you'd actually go long. But a lot of people don't have sense, so then they would still stay short, and then you get this massive V reversal. So I'm very big on what other traders are thinking about, how other traders are positioned. Like, what is the other trader most likely to do based on what's happening throughout the day? And these are all guesses. These are all just stories that I create for myself, that make sense to me. But I'm very consistent with these stories, and I'm very consistent with how with what I tell myself. That on a long-term period, it makes sense for me. So now look, we're testing this trend line over here, and very curious to see how we break it, or if we break it. Typically, back in the day, what I would do is I would just blindly buy into this, thinking, oh my God, we're gonna break for breakout. But I've learned not to do that, because you see, if I bought right at 08s, right here, 08s, 09s, if I bought into it expecting a break, I would have been offside automatically, and then I would have been sweating. I would have been wondering, okay, am I gonna get my price again? Am I gonna get my price again? Am I gonna get my price again? And you see, it's just slowly curling away from me. So what would I do? I would probably hold it because I'm stubborn and I'm an idiot. I would hold it. I would hold it. I would hold it, right? I would hope for my price to come back. And eventually, as it goes lower and lower and lower, that's when I would punch out, feeling like an idiot. I would imagine a lot of people marketed in here. Look. Yeah, I've learned. I still make stupid mistakes though, don't get me wrong. I still make these mistakes. I'm actually hoping that by streaming, that I do less and less of these mistakes, because then it holds me accountable. Um, but hey, we're all idiots, and I think even really good traders make the same mistakes. It's just as you get older and as you get more experience as a trader, you make those mistakes less and less, and they become less costly. So I could have still made that mistake of buying at 09s, but I would have gotten out maybe around here, Whereas before I would have been holding here. I would have still been holding. And then a little bit of a rotation up to 97, 98. I'm like, okay, this is great. I'm still holding. I'm good. And then watch it curl back down, and then, exit. So you make your mistakes less, and they become less costly. So, but as long as you're aware you're going to make mistakes, I think that's where you grow, because if you expect to not make any mistakes, then you're very stubborn with your trades. But when you go in with the expectation that, yeah, you're going to lose trades and you're going to have mistakes, then every loss is just it's part of the game, and you understand that, and it doesn't get to your emotions. I do actually. I do have a playbook. I'm still working on it. I don't do it as often as I like to. I'll be honest with you. But I do have a playbook of some plays that I had in the past. But I think I need to update it with newer material, newer content. Because I'm a very visual person. And these types of days are very frustrating. I know I said this before, but just imagine it. Just picture it. Like, if I was in a trade right now, I would be freaking out. Just picture it though. You get, like I said, you get this massive sell, and you're thinking, "Oh my God, I'm actually gonna get in on it," right? And you could be waiting all morning. Literally, you could be waiting all morning, all afternoon, and only around like 1, 2, 3 p.m. do you actually get the freaking trade that you're looking for. So you could be suffering for like 3, 4 hours on a very slow day, barely making new lows. It's just annoying. So how do you trade days like today? Either you trade with the expectation that this is what's going to happen, in the sense that it's going to be a very slow, choppy day, right? You put tight stops, tight take profits, right? Because when you see a market that's barely moving, why would you want to put like a crazy take profit level, right? I'm trying to pull up my 1 hour chart, but for some reason it's not. It's weird. Oh, okay, there you go. The type of order flow that I do, no, I don't think so. I think where I got my the most basic of understandings is maybe Anthony Drager. He's done a couple of podcasts. I don't know if you know Anthony Crudelli and his futures radio show, but he's been a guest on Anthony Crudelli's podcast. His name is Anthony Drager, so it's Drager, I think. Um, and I learned a lot from him in terms of trap traders and how the markets move. That is true order flow, in my honest opinion. But he has his own style of trading. He has his own proprietary tools that he uses to find out where trap traders are. I tried using it for about a week. Maybe I didn't give it a chance, or maybe I didn't give it enough. Yeah, maybe I just didn't give it a chance. But I personally didn't resonate much with me. But I would say majority of my understanding right now on order flow comes from Anthony Drager. I just have a different style of trading, right? But I took the information that I learned from him and made sense of it my own way. But I don't know too many traders that use the footprint this way, in the sense that having a delta to the left and volume profile on the right. A lot of footprint traders use the traditional way for whatever reason. Yeah, no worries, man. He's really, really good. He's how I understood the whole point of support turning into resistance, resistance turning into support. Um, I mean, you know that resistance turns into support, support turns into resistance, right? But you don't understand exactly why that happens. And he helped me understand that. Okay, see, so now if you want to look at order flow right now, now you see that we're picking things up in speed, right? This whole time, we've just been chopping around with very low, I wouldn't say low volume, but with just low speed, right? And now we're picking up speed a little bit in the way the orders come in. So it's very interesting to see how the market reacts here.
I wouldn't get fooled by this rally. I would not get fooled by this. I think the POC is still up here. Sorry, the POC is still down here technically, right? We're reaching the POC over here. Oh, hold on. You can't see it. Just wait, just wait. Because I know Nasdaq. I just know Nasdaq. Sometimes it's intuition. It doesn't make sense. It doesn't make sense that we spent all this time and all this volume to just shoot back up. I don't think we trapped enough people. I don't think there was enough of a down move. I think we push at least a 10, maybe 310. We may or may not actually. I don't know. But low volume is also one of it, though. If you want to think about it, is that this rotation back up was low volume. This rotation back up was low volume. A bit of volume here, and now we're creating volume here. What I want to see is I want to see. So the fact that we're creating volume here may make this move viable to the upside. It may make it viable to the upside, but look how we curl here, right? Above this price here. Significant drop in volume, 639, 219, 69. So you can go short here, but you got to be wary about what happens when we retest, you know? Too slow for me. Yes. Although I do think that if I spent a lot more time on ES, I could read the footprint better. But I'm so used to Nasdaq, you know, like I don't know. I'm very very used to Nasdaq, the way Nasdaq moves. I feel like if I went to ES, I would need to go and practice it for about a week or 2 weeks just to get used to it. You know, there's no way that I can jump onto ES on a live account. So actually, I like the structure for long right now. You go up on low volume, you start to build volume here, and then you shoot up. You have selling here, aggressive selling over here. That's not able to get a reaction of the market in the sense that it's not able to come back down, right? So there's absorption by buyers over here, and that's enough typically for next leg up. So all this selling, heavy selling, barely bringing the market down, yet you have very little aggressive buying that's able to push price higher, right? So there might not be as much liquidity by sellers, right? Which means that any sense of buying, any little bit of aggressive buying is, you know, sellers are not able to hold it. So it's good structure. I like the structure, right? You go long and then you can put a stop loss somewhere here, right? Because you know that if it comes back down here, you know, the trade idea is no longer valid. And it, you know, it was a good trade to take, right? With the anticipation that it could break out.
But you also want to keep your stops tight here in a day like today because I mean you've had a massive sell-off, right? There's a massive sell-off, and this could also just be a trap because you are above the trend line. So you have a lot of buyers up here. So it's not uncommon to see us break a trend line and then fake out to go back down, especially after a long down move like today. So there are a lot of scenarios that can play out in your head. If you want to play the breakout to the upside, this is what you got to be looking at. This is what you got to be thinking. There are so many scenarios that can go wrong and right with your trade. You got to try to understand all of them because when you understand all of them, you can take your stop without feeling too bad about it, without letting it affect your mentality. Because it could be a good trade, but you could still end up being wrong on that trade, right? It could be a bad trade, but you can be right on that trade. And those are the trades you got to be careful about when it's a bad trade, but you end up being right, because the next time you take a bad trade, you can end up being very, very wrong. Yeah, you got to be flexible mentally. You got to be. And like I came into trading thinking that I always got to be right. I always got to understand everything. Like, if I took a trade, there's no way that it's going to go wrong because why else would I take this trade in the first place? But that's not how it works, man. Oh, I think if I put my stop here, I would have gotten stopped out. Hold on. Oh, I wanted to see if I can undo, but whatever. I wanted to see where I put that line. No, I wanted to see this go up right away. I want to see this go up right away. It's like the more time we spend deciding what the hell we want to do above this trend line, the worse it gets. You get so much choppiness before you can actually decide what could happen. So I could get stopped out and it could still rally. Come on. There's liquidity over here. I think it might grab this liquidity and then go. Is it though? Either way, I didn't want to take the risk that it grabbed the liquidity anyway. The probability of it grabbing the liquidity is much higher than a grab and go, so I didn't want to move my stop. So it's interesting what happened. This rotation, we came up on volume. This rotation was low volume, right? And then it got rejected real quick. So this is an up bar because I'm using point and figure. So this is an up bar. You have a down bar, right? So point and figure works when price retraces a certain amount from the high. So when you have a 110 point and figure, you each one time that price retraces 10 points from the high, you get a new bar. So price retraced 10 points from the low, you create a new up bar. Price retraces 10 points from the high, you get a down bar. So this just shows you rotations, right? If you have a bar like this, price has never retraced by more than 10 points. So you know this is a very strong down bar, right? So I really like looking at rotations, especially as an order flow trader.
So anyway, what happened was we had an up bar on high volume, right? It got absorbed. So you can think of it two ways. Maybe you could think of it as, okay, this is a really strong volume on this is a really strong up bar on high volume. Get a very slight retracement on low volume, which means that there wasn't much interest to trade lower to come back down because, like, sellers are not really actively fighting. But then you get this up bar that barely made a high. And then as you come back down, you're like, okay, crap. And that's why I said, like, the more time we spend, the worse it becomes for a long trade. And it just ended up going down. Because this is two-way action, right? Here and here, this is just two-way action. This is buyers and sellers. And when you're playing a breakout, you don't want a lot of two-way action because it can go either way. But again, we learn from our mistakes, right? Like, I don't hold these trades for long. I knew that around this point my trade idea was no longer valid because I entered the trade thinking, we might get a small pullback, but I want this to go ASAP, right? So the more time we spend, the lower price curls, my trade idea is no longer valid. That's not the reason why I entered the trade, so it should definitely be the reason why I exit the trade. Let's look at the structure over here. Bit of an update. Something that caught my eye. You get this low. We break the low. We don't go above it. We get this low. We break that low. And we don't go above it. And the moment you come into one structure, things start to change. The dynamic has changed. The moment you break into the next structure, now you know the dynamic has truly changed. Does that mean we're going to shoot straight up? Absolutely not. This just means that something has changed right now in the market, and you need to be wary of it, and you need to pay a close eye on how you can play it and the different scenarios that can come about when you play that way. There's one. This one's pretty significant. You can see that the midpoint was reaction. There's a reaction area over here. It's too messy though, this one. It's way too messy. This could be its own. Perhaps. This is actually, I know I keep saying it's very messy, but if you think about it, it's pretty clean. You can clearly see a structure to what's going on here. If you want, there's this big box here, but there's also this one inside of it, right? There's a lot of volume. There's a lot of traders in here. You got one here. Now you get one here. So if you want to go break out of this, you have to go through this, and you have to go through this. Going through this is not a problem because you don't have that many traders. Going through this might be a problem. But if you're long here, you're not too worried if you're long in this zone. Because if you're long here, at worst you're offside. Well, depends if you got up here, but if you got up here, I would argue that you're already out. If you got somewhere in the POC, right, because that's where the majority of the volume is, 300, you're down 50 points. Day traders might have gone off, day traders might have already exited their trades, whatever. But I would say longer term holders, swing traders, 50 points might not really affect them too much. Some people may have bought here, might not really have affected them too much. But if you're short here, if you're a new short over here, that's where it gets interesting because you have not really seen a massive move down. So the moment you start to curl up, right, as a short over here, you're going to start buying to get out of your trade. You might want to scratch it. You might want to put a trailing stop. You might want to even hold it. And so that's where it gets really interesting because you're short here and you see price come up, right? The buying that happens here, a lot of it has to do with the sellers that are over in this area. Okay. And if you're a buyer in this area, like I said, you're not necessarily sweating too much. So if you're a buyer in this area, you're not you're not selling your position to get out of it. Some people might be doing that, but I personally don't think that this was enough pain for buyers to want to get out at the first sight that they can. I think here there's a lot of pain for buyers, but here not necessarily too much. So you need to figure out who's under more pain or pressure right now. Is it buyers or sellers? And based off of that, you can take a trade to take the other side of their trade. So for example, if buyers were under a lot of pressure, what would happen is you'd get price to go up, and then buyers would sell to scratch their position or would sell to get out of their position. So you get this little move up, and then as they start to sell, it comes back down, and that generates more fuel for the downside. But because I think that sellers are in a lot more pain, you're going to get a lot more of this bit of buying, bit of selling here from buyers. Then you're going to get a lot more of this. I think that's what you're going to get a lot more of. Because keep in mind that you're also going to get profit taking. You're going to get people with trailing stops. You're going to get, you're going to get a lot of things that happen. But again, this is not a problem. This little box right here, you come up here, that's not necessarily a problem. We start to panic, I think, as a seller when you get around here. I was so close to getting filled. I don't want to put my order back at 68 because I think if we rotate again, I think we'll rotate maybe higher to 70, 72 and then maybe come down. But 68, I think if I want to get a much more accurate fill at that point, because either I missed the trade completely or that entry was no longer good. So I had an order here at 68. We came up to 66 and we rotated back down.
right? So either I've completely missed this trade and we continue lower, or if we do want to go higher, I think 72 would be the next rotation to go back down, you know? So 68 would not be the best entry anymore. It could also shoot up higher, of course. But if it does shoot up, at least I'm entered at 72 and not at 68, you know? So I'm saving myself a little, I'm saving myself here 4 points off of that. So that if it does shoot up, let's just say to 80, and it comes back down, then I can get out at a better price, or I can scratch, or I can maybe, take a very like 1-2 point loss. Whereas if I was entered at, if I had entered at 68, obviously, right, and we shoot up, and I wait for a pullback to get out, then obviously, I'm taking a much larger loss. Oh, I didn't even realize this. Look at the dynamic here. Holy crap. Holy crap, look at that. Look at all the selling. Negative 1342. Look at this. I did not even realize this. I actually went away. 10%, 16%, 8%. There's a lot of selling here. Aggressive selling. That's really interesting. We literally, in a matter of 30 minutes, 20 minutes, we sold around 3,000 contracts aggressively. Aggressively. That's very interesting to note. That is interesting to note. I don't now the thing is that I want to go with the trend, of course. But this could be a game changer in the sense that because there's been a lot of selling here down here and it's not going anywhere, there's a very high chance that we can shoot up or that we can go up. There's a high chance. It might not happen, but you know, just think about it, right? You have so much selling down here, yet price is not going any lower. So there's a lot of buying, a lot of passive buying that's taking place right now. And if you have a lot of selling that's happening here, right? Then there's less selling that's going to happen up here. Which means that if we do rally, we rally a lot smoother than coming down. So I kind of also like the structure here. You can tell the volume kind of died down here, and it died down after the retests. Or, yeah, is that there's just no more volume down here after multiple retests. So we can shoot up for a little bit, take a break, come back down. That's what I'm hoping for. That's what I'm playing at. Yeah, because I don't think the 68 is going to get defended this time. Maybe 72, maybe 72, my original or my second short attempt, maybe. But 68, I don't know. I haven't watched ES at all today. Yeah, ES has already broke out of that little consolidation. Uh, it's attempting to fill up this low volume zone here. But for ES, even for Nasdaq, we're still in the value area technically speaking. So we're not necessarily going into no man's land. But it's struggling. It's struggling to go higher. But if you try to if you're looking to fade the market, if you're looking to fade any type of market, you got to keep your stops tight. If you're looking to go with the trend, you can keep your stops a little bit wider because the probability of it going in your favor eventually is a lot higher. Yeah, it seems to not even want to trade in these areas here where there's low volume. It seems to want to just build volume as we go lower. With that right here, that's what I have my eye on. That was more of a punt trade because, yeah, you see absorption, but you just don't know how long that absorption can last. So you're taking a trade based on the fact that you think that somebody's sitting here just absorbing all these sell orders coming in, and that it's just going to shoot back up. But you could be totally wrong in that, yeah, he could be absorbing or he could be getting filled, and then it's eventually he's just not gonna, he's not gonna want to get filled anymore, so it can just continue back down. So you go with that assumption, right? So that's why you got to keep that stop tight. So I think the market saw this 200 on the bid, and now I want to see what it does with this liquidity, whether it wants to grab it or not. Seems to me like it wants it though. I want us to create a new rotation bar. It would be nice. 10 points off the low of this. But we can't even reverse 10 points. What was the low? 50? Yeah, so around 60 you're going to get a new bar. Come on, come on, come on, buddy. All right, we got a new bar. Now I want to see if we continue higher, if we retest this. If we retest this down on low volume, that's still pretty good. Are we going to defend this area again? I don't know. I don't know. But my God, it seems to be reacting to 68s. So you can put a mental note at 68 over here. Like that's the short-term resistance, right? And then if we break 68, 69, 70, then that's a good sign for bulls. But right now there seems to be a lot of resistance at around 68. Whether it's resistance or whether it's an unwillingness to trade there, but I don't think so because you've had a lot of contracts up here. So I wonder if guys who shorted here can be trapped, and I wonder if the guys who shorted here um, would be enough to push this market higher based on their fact that they might want to, get stopped out, right? They might want to exit their trade and buy. I don't know, I feel like these days where you'd want to buy the low, it gives you this false hope that it might break out. So you're holding this trade, and then all of a sudden, you're on side maybe 10, 15 points, and then all of a sudden it just comes right against you and it just shatters everything. It shatters your dreams, your hopes. Uh, and if you've bought all day today, that's exactly what happened to you. You would buy here, you'd think, oh my God, I'm actually going to catch the low. Comes back down. Oh my God, I'm going to catch the low. No, sir. Oh my God, I think I just caught the low. Nope, 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 nope. And could this be the exact same thing we've been seeing all day? Very possible. I mean, who's to say? What makes me so special that I caught the low today? You know? What was different? How can I predict the low? But based on a series of, what happened before, right? Looking left, looking at the volume profile, the structure of these things, you can take educated guesses, right? But you could have said the same thing for here. You could take an educated guess here. You could take an educated guess here. But I'm taking an educated guess here, and based on what I'm seeing, right? There's a nice possibility that we break out of 68 if these bastards actually want to break out of 68 so we can test 75. But we have a lot of if we actually want to break out, we have a lot of volume to break through. So two things. If you caught the low, you're gonna have to hold it. Um, don't expect to be in significant profit right away, right? You're gonna get a lot of choppiness, and you need to expect this choppiness. So this is more of a swing trade type of trade, right? Don't get frustrated if the market comes back down. Um, and don't get frustrated if you make a new low. You could make a new low by a few points, and then it can pick right back up again. So it really depends on how you want to trade this. I want to see us grab 75. I want to see us grab the liquidity up here. Can we do it? We're back below 68. Can we get back above 68 quickly? Yes, yes we can. Great. That's good news. I like it. I like it. I don't like it. I like it. I don't like it. I want to see this come here. There you go. Come on, come on, come on. I know you want to. I know you want to. I know all of you short sellers right here are buying to get out and you're trapped. I know all of you short sellers here want to take your profits or you want to scratch your trade. I know everybody over here, doesn't want to see the market come up here, but they get bailed out again and again. Buyers cannot catch a break today. Oh, that's a nice rotation. That's a nice rotation. Yes. Yes. High volume rejection and then quick rejection back up. Yes. I don't want to see this come back down. I just don't. You don't. This is the line in the sand right here, 64. And it seems to me my stop is placed just there, so I'm not going to touch it. But from here, you want to see a bit of volume pickup, and then you want to see this go right up here. You want to see these guys who shorted newly generate the market higher. You want to see these guys generate the market higher. And you definitely want to see these guys right here generate the market higher. These guys are getting stopped out. They're scratching. Guys who are short here are probably putting trailing stops because they want to take a bit of profit, very little, plus their commissions, who knows, whatever. Buyers have been beaten all day, and now there's just nobody selling on the way up. I only wish I went in with more size, but like I said, today that was not the intention. Today the intention was to just get a few trades in, get some solid trades in. I'm gonna keep this here because I do think that we can come back down. So if I keep this, then I'm doing myself a disservice if I bring it higher and higher. I want to maximize the profits or the potentials from here. I think 84 could be a nice test. This seems to be in line with the trend line. It seems to be in line with the midpoint here at 90. Actually, I don't even know if that midpoint's good. I just drew that in passing. I think the midpoint would be 99, perhaps. Around 86 would be the low point. 86, 85 would be good to get out, I think. Again, I just wish I went with more size because then what I would do typically is I would take some off here and I would let the rest run, you know. Um, but either way, it is what it is. That's why I don't like trading with one contract at a time. We seem to be getting into some resistance, but that's not too bad. And I'll tell you why. What I don't want to see is volume being built here. I want to see volume being built here. So I want to see this get rejected. Right? You have volume here. I don't want us to come down into this volume here. You see? This volume, I don't want us to come down in here. Because from there, you can go like this, or you can go like this. Might retest, might test 62 actually. Might test 62 and go up. This 324 is worrying. It's like actually not necessarily, because there was an attempt to build volume, but it wasn't able to. So these trades are nice because if this doesn't come back down, then it's going to shoot up aggressively. The reason why it's going to shoot up aggressively is because these guys would not have had a chance to get out of their trade at scratch. So the less pullbacks you get, the more aggressive the push up. And I hope we see that right now. I hope these guys start to panic and they create this sort of aggressive buying. Come on. I like this. Yeah. Yeah. Come on. More. I don't want to see this come. I just don't want to see this come back down. You want to see very tight rotations. You want to see it touch 82, go down to 79, go back up to 84, go back down to 80. You know, you don't want to see this massive type of choppiness, right? You just want to see very tight rotations, not giving anybody a chance. You know, you want to see buyers having to chase to get in or get out of their positions. This is what you want to see. So we just broke this trend line, but I don't know how much selling is going to come here. Can we go up to 90, 95? Yes, I think we can. But I'm going to get out of my trade because if I had, this is what I would do. If I had more contracts, I would have taken some out at this price. So this could continue further, but for now, I think I'm just going to get out of this trade. I think that was a really good trade. That was a 30, 35 point trade off of what? Off of just basically seeing a shift in dynamic over here. The major reason why I went in on this trade was because I saw this structure. Here, I saw volume, and then I saw rotation above that volume. And I got in on that. ES's structure looks a bit more clean. So ES could very well reach the point of control. I think it will. I mean, at this point, it's a matter of what? It's a matter of 1 point, maybe 4 or 5 ticks. Yeah, yeah, it's definitely going to touch. I think we shoot past this POC. I think we shoot past VWAP. See, this structure, yeah, see, the structure wasn't too difficult to get past, as you saw, right? And now these guys want to take some sort of profit. They want to scratch their trades. They do not want to see this reverse. Okay, so you'll get that. I think 311 is very, very possible here. 310, 311, very, very possible. I like this. I like this. I like this a lot. I like this type of structure. I like this type of setup. These types of setups on a footprint give you conviction to either hold on to your trade, to add on to your trade. Um, well, actually, not right now. Not anymore. Not anymore because we're building volume here. I did not want us to build volume here. I like to see a breakout on low volume. You can build some volume here if you want, and then low volume, and then you build a P, like a P-shaped profile. That's what I like. I like to see this. I don't like to see this. There's just too much going on in this one candle. I reckon if I fade this, if I actually go short here, I could probably make some points. But I'm not going to, because I'm not necessarily the most confident in this type of setup. I see this a lot, but I don't trade it enough to know whether it'll work out or not. But we can take a mental trade. We can take a mental short over here, and see if this is going to come back down or not. Interesting. Interesting. Very interesting. That is not an insignificant amount of volume. That is very, very significant. Interesting. I wonder if this picks right back up, though. This could be one player. This could be one guy, right? Looks like it's coming back. Yeah, yeah, yeah. Yeah, yeah. I didn't like the structure here, though, man. You know what I mean? Like, I just didn't like... Um, I didn't like the way this breakout was building. So this is a very good point. 75 could get picked up. But that's a massive amount of selling, man. That's you can't ignore 5,000 contracts and like 20% of it is all selling. You can't ignore that. But you also can't ignore the fact that we're selling this much at a relatively high, well, I don't want to say a high point, but if you want to look at this breakout, technically you have so much selling at the top of the breakout, you know. So this could still be absorption by buyers. Buyers could still use this opportunity to take in passive orders, right? To take in their limit orders. Actually, I think I'm going to mark it in. I need to see something before I mark it in. I want to see volume and then no volume. And then I will mark it in right here. Instead of putting a passive order, I'm going to mark it in with the expectation that it's just going to go right back up. So that's what I'm waiting for. We might get it though. We might actually, because a bit of curl, and it should be around 72, 73. That's when you get that indication. Go down more, can we go down? Was I too early? So technically I want to see this reverse back up. I don't want to see this continue down. We're still okay. I think I was too early. Above 70, above 71, we're good. But if we don't go above 70, 71, dangerous. See? Above 70, there's a resistance at 70. Okay. Okay, we're there. We're there. Come on. Come on, don't curl back down. Mm. If I get stopped, I get stopped. I think it should not go below 67 anyway at this point. It's okay. No, come on, don't do this to me, man. No, don't do this to me. You bastard. Oh, you bastard. Nasdaq, you bastard. Yeah, typical of markets, I know that. Whatever. The idea was there. The execution was a little bit early, and I guess just happens. Whatever though. Chasing in is very risky. If I chase in right now, I don't. The dynamic hasn't changed too much for me to think. Okay, if I chase in, then I'm on the right side of this trade. But I will say this though. Look, we went from minus 20% negative delta
or like a 20% negative delta to 8% delta, right? So it's like there's clearly some absorption going on around here. And there's both aggression from buyers and sellers, despite the fact that sellers are obviously edging out. But to go from a 20% to, 8%, um, it's, you can't ignore that. Let's do it. Tights, the stops have to be very tight if you're trying to catch this falling knife. Tights have to be stops have to be very, very tight. You have to be consistent with the way you're doing it, right? You get stopped out, you can't just tell yourself you're gonna buy and then keep a stop all the way down here, It just feels like one of those moves that can reverse in an instant with just the way that it's behaving. But again, your feelings could be totally wrong. It's not about how you feel. I don't know. There's something about this move that I just feel like with all this selling, you can get punched in the face real hard, right? In the sense that like you could be selling and then this could just shoot up. I think we're midpoint value area. We'll try one last time. One last time, we'll try it. Although I think I made a wrong decision because technically, if you think about it, this is one massive move, right? And we barely had a rotation up. We barely, like if you don't get a new candle, then you gotta like look at the signs and say that okay, well, I just think it's a very strong sell-off. I think the entries are fine, but not on a day like today. I think on any other typical day, these types of entries, you would see it just bounce right off, you know? But on a day like today, you see the bounces, but they bounce maybe 4 or 5 points away from your entry, right? So you're on side 4 or 5 points and then it comes against you. So either my expectations need to change based on the ATR, right? Because we said that the ATR, as it goes lower, you should not expect these larger moves. So it's possible that maybe 4 or 5 points is all that I should be taking out of these moves. But then with a 4 or 5 point profit, then you're taking 1 or 2 points of risk, or maybe a 1 to 1 of risk, right? So the argument could be made: should I even be trading this type of market today?
See, now you have liquidity at 90. You have 213 contracts at 90. That's interesting. I don't think we had that before. These pullbacks are very, very, very weak. Oh, did we? Okay, okay. It's good to know. No. Broke 60 off of that. But let me see one thing. We never made it 38%. We never retraced more than 30%. Even this retracement was never a 38% retracement. I think I'm fading a fucking strong market. Yeah, I think I'm fading a very strong market. If you think about it, if you never had a 38% retracement, what does that tell you about the intention of sellers? This was perhaps the biggest retracement we had all day. Perhaps no, not even. This was in fact the biggest retracement we had all day, and it wasn't even 38%. But I like the fact that this was the biggest retracement. We retraced back. Could be new sellers entering the market. Could be buyers who are trapped getting their chance to get out of the market, right? So you end up trapping a lot more sellers on the way down, you know. So if you definitely want to play a reversal, like this is a good structure to have in the sense that you have this big retracement, you come back down, you can't make new lows, and then you just continue upwards, right? That's like a trend reversal, you know. Now, could this massive candle, be a trap? We will only know once we start to retrace a large percentage of that candle. I don't use fibs too much, but I use fibs to gauge the strength of something. So this seems like it's a pretty strong candle. I mean, if we can, you tag the 38 and you continue down. Like a lot of people like to use fibs, but they don't understand what they're using it for, or how it's being used, or why it's being used, or when to even draw a fib. Um, and I see a lot of people I see a lot of traders hate on the fib, um, but I think they're hating on it for the wrong reasons. I love the fib. Because the fib can tell me a lot. Like the fib can tell me that you can't even retrace 38% of this candle. Like if you can't even retrace, or if you can't even take back 38% of this candle, what does it tell you about this? What does it tell you about this candle to begin with? That it's a very strong candle. If the next candle retraces 100% of this candle, then what does it tell you about this candle? I like that we've come into support over here, for sure. But I don't like the fact that there's interest to trade over here. Right? There's volume over here. It's a good sign. It's a good sign to see selling at the bottom of a candle. And then, you know, to see bids go up. For sure, it's a good sign. Can we break the 38? Can we break the 50? Can we break the 61? Right? If we break this, like the higher up you go, the higher the probability of a full retracement, of course. Right? A lot of people use a 78% fib. I don't like it. I think once you tag the 78%, there's just a higher probability of actually reaching 100%. So I like a rejection off 38 and then a retest off 38 and then 50. Because typically, otherwise you just get the straight retest of 50 and then come back down. But you get a retest of 38. It proves that, it proves that, okay, you're right. You tested 38 and then you come back to test it again. It proves that this 38 was not strong to begin with. So what are the chances of the 50% to be strong? We're back above this trend line here. Although maybe I should probably just delete this trend line because it's not the best, but I think it could still hold. It's good to use as a reference. We're back above, tested that trend line on this candle. Could we make highs? Who knows? Yeah. Yeah. So tell yourself this. Forget this. Let's erase this. You have 18,000 contracts on this one candle. 18,400 contracts on this one candle. The next candle you had 1,300 and then you had 1,600. Now you have almost 3K contracts and you've already reached the 50% of this. Food for thought. Just think about it. If we go above this candle, I would argue that we could see a shift in the day. If we go above this candle right here, Because if this candle wasn't enough to make new lows, then I don't think we're going to try again higher. Not out of the woods yet, though. I think we're still hovering around 50%. It's all up to whether or not these guys start to panic and they start to buy. But I like what I'm seeing. I like what I'm seeing. This 90 seems to be the target. They might want to grab this liquidity at 90. Right? Liquidity, always think of liquidity as a sort of magnet. Don't think of liquidity as a sort of like a deterrent. Just because you see a lot of liquidity on the book doesn't mean that there's a lot of pressure for price to go against it because, oh my God, you have 230 contracts, so buyers are going to be scared. You know, no, people want liquidity. And also how we behave around liquidity in the sense that you see this liquidity at 90 and you see it come off. It says maybe it doesn't want to grab that liquidity. That's very possible. But then it comes back up to it, comes off, comes back up to it. It's like it's teasing. So this should be that full line in the sand, 61, right? Above 61, then, it's pretty much lights out for sellers. It's like it's now or never to defend. No, but this seems like it's going to be a full retracement. This looks like a full retracement to 96. Take a look what ES is doing today. Yeah, so ES is almost ES has it's almost at its 100% retracement off of this high. I think Nasdaq can follow suit. I wonder if ES's point of control will be like another resistance for it. But this just doesn't look good for sellers. I don't see how this can be good for sellers if you shorted on this candle. The higher we go, the more trapped they are. And don't do me dirty. Come on. Just get it. We know you want it. We know you want this liquidity. Stop teasing, Nasdaq. Stop teasing. I thought we were friends. Would I be worried about a pullback? I don't think so. I wouldn't be worried about a pullback because a pullback gives these guys the opportunity to scratch their trades, right? A pullback gives these guys the opportunity to buy, right? Sellers down here are given the opportunity that once there's a pullback that they can scratch their trades or they can take a smaller loss than they would have if it went higher, right? So I wouldn't be worried about a pullback. Maybe I'd be worried if it goes below the 38 down here. If it goes below 70 to 72, I'd start to get worried about that pullback. But right now, I'm not worried about any pullback. I think the fact that we didn't get rejected off the POC on ES as we did previously, it's also different. If you notice, you had this wick, came back down, and there's barely a wick here. There's more willingness to want to get filled around here. So that's one change in dynamic that I'm seeing. I think Nasdaq can definitely catch up. So the moment that ES goes to VWAP and above, I think Nasdaq can make that push. But it's also possible that Nasdaq can be lagging the ES. Nasdaq could be the reason why ES won't make that push. The more bounces we get, the more the likelihood of a full retracement back down as well. The reason that I say that um, the more pullbacks you get down is bad for longs and better for shorts is because as the market goes up, guys who are trapped here, right? They're waiting for a pullback to get out of their trade, right? Sellers who are trapped here are buying to get out of their trade. So when you get a pullback, they get their chance to buy, they buy, right? They get another pullback, some others get a chance to buy, they buy. They get another pullback, some others get their chance to buy, so it goes up. Then once you get a pullback, who's buying? If these guys are all shaken out, finally they all got out of their trades at scratch, or they got out of their trades at the level that they wanted to get out of their trades, who's buying again to put it back up? Nobody. So you come back and you go down. You know what I'm saying? Like the more tests you have, the worse it is. So if we don't make new highs right now, then I gotta get out of this trade. I gotta take profit. If we don't make new highs right now, then the likelihood of it actually reaching my entry is quite high, and I don't want to give away profit right now. Because also think about other buyers in this situation. They're probably thinking the same way that I'm thinking, right? If I got in at 59, why do I want to see price go all the way back down? Why would I want to even hold it, right? So I would put a trailing stop somewhere here, right? And if there's nobody else to buy it, right, as we talked about, so I'm out of this trade. I don't like it. If there's nobody else to buy it back up, right, for trapped sellers, then it's only going to come down. And if you have buyers here that are holding their position, it's only going to come down even further. Simply because that they don't want to see their profits dwindle, so they're going to put trailing stops, and it's going to further the sell-off. And on top of that, it's already 12:30. It's lunchtime. It's just, I don't know. I don't like trading past 12 o'clock. I don't know. I don't like it. I don't like the dynamic of this one right now. I wasn't worried about the first pullback. I wasn't worried about the second pullback. But after 3, 4 times, it's just it's not what you want to see. But on that note, I think I'm going to call it a day. But I'm curious to see what happens. Yeah, you see? Trapped shorts are no longer buying because they already bought here. And if the buying that they've done here was not enough to push it higher, a retest means more chances of trapped shorts to get out of their trades. And if that wasn't enough to push it higher, think about a third retest, think about a fourth retest. At some point, eventually, trapped shorts are either going to hold on to their shorts or they're already out of their shorts, which means there's no buying. And all that's left is buyers. I wouldn't say that they're trapped buyers, but they're definitely open buyers. And so that's going to bring the price down. That's my understanding of it, right? Um, and that's how I view the market. And I could be totally wrong. Like I said, I could be wrong 1,000%. But it's the fact that I'm very consistent with how I view the markets that, you know, makes me more profitable in the long run because I'm consistent with it. Like at this point, if I was a buyer at 59, why am I holding this trade? Like why? For what? For hope? No. I'm getting out. I'm putting a stop loss. I'm putting a trailing stop. And I think that's what everybody else is doing. Because like I said, if that pullback wasn't enough to generate buying interest to go higher, then why would it generate buying interest down here when all you have are a lot of buyers? I hope it makes sense though. Point of control on Nasdaq shifted down as well. We bounced off this trend line just a little bit, but I don't see it as significant. Again, I think that this could just come back, make lows, or at least test this low at the very least, maybe test it. But the point of control like shifted down, the value area shifted down. I mean, it's building a lot of volume here. But it's interesting to note this volume because it's important to recognize the amount of volume, and it's important to recognize once we test out of this volume how much energy is already built in and how much energy can be used to push us higher or push us lower based on everything that's being built here. At the end of the day, a B-shaped profile is bearish, right? A P-shaped profile is bullish. So just like that, right? 7,000 contracts on a positive delta, reversed, trying to reverse an 18,000 contract down bar, right? Matched by a 7,000 contract up bar is already being matched by a 7,000 contract down bar. Yeah, I don't think this trend line was significant enough to hold it. I think we continue lower. But I think I played that trade pretty well in the sense that I held on to it expecting a higher move, and I think if that move happened, it would have been a really, really, really good move. But once I saw the market curl back down and I started analyzing what could potentially happen and where I should get out, I think I played that trade very, very well, based on the trailing stop, based on everything. It's not enough to just play your P&L, right? Like P&L has nothing to do with the trades that you're taking, right? Just because you want a larger trade, you want a larger P&L, right? Like why am I holding it? Why would I hold this trade right now at scratch just based on the P&L, No, it's got to be qualified and disqualified based on the actual trade itself. Money should have nothing to do with it. Whether I'm trading one contract or whether I'm trading 10 contracts, money has nothing to do with it. Yeah, regardless, at 12:30 lunchtime on a Friday, no less, you don't want to trade anymore. At least I don't want to trade anymore. I'm already, when I trade on the weekdays, well, I only trade on the weekdays, but when I trade during any other type of weekday, I'm always done by noon anyway. And on Friday, it should be no different. I think on Friday, it's even worse in the afternoon because some people like to take off early. Some people want to go to a long weekend. There's just not much volatility. There's not much, you know, potential. It's a slow grind. But yeah, on that note, I think, if you have any questions, always, leave something in the comments. Let me know what you want to see more of. Let me know if this is helpful. If it's not helpful, let me know as well. Any feedback helps me as I'm growing the channel. But I appreciate you guys watching. I appreciate you guys learning, asking questions. Hopefully I can help. Take it easy, Rui.